Hey, good morning everybody. Today is Tuesday, May 10th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning by taking a quick look at our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, again, we had 38 real estate investment trusts. That's a huge number. We had 5 medical devices, 5 healthcare services stocks in the top 100, 5 packaged foods, and rounding out the top 5 we had beverages and restaurants with 5 stocks each. We've been seeing quite a bit of real estate investment trust. We've been seeing quite a bit of medical devices and healthcare. A little bit of packaged foods and a little bit of beverages recently, and I guess a little bit of restaurants recently. I think that certainly real estate investment trusts have been powerful and maybe a good place to look for leadership, as all of today's spectrum analyzer industry groups would be. Let's take a quick look at the Russell 2000. Russell yesterday closed higher, and note how on Friday the Russell came down and it tested its 50-day moving average. We show the 50-day moving average here in red. I've added that to the chart because both the Russell 2000 and the S&P 500 tested their 50-day moving averages and held on Friday. The fact that we made a higher high and a higher low than we did the prior day indicates that perhaps this market may be at a good turning point. Worth keeping an eye on the Russell right now. The Russell is bracketed by by resistance up here in the 1140 area, and we're going to call support the 50-day moving average for right now. If we undercut the 50-day moving average, the next logical area of support is going to be down here in the 1179 range. Technically, if we were to follow it, and we don't, the Russell 2000 would be on a sell signal right now. Notice how on this bar right here we closed below our 1% envelope, which we show in gray dotted line here. We had a downward sloping 21-day exponential moving average and a downward sloping 10-day simple moving average. That would have given us a sell signal on the Russell, and the Russell would remain on a sell signal. We don't typically follow the Russell with our market timing model, but I do think that it's interesting and I do think that it's worth noting. Let's see what the NASDAQ Composite's up to. But before we do that, stocks closed mixed but mostly higher yesterday. Trading volume was weak as the market continues to struggle for direction. The good news for the bulls is that the S&P 500 and the Russell 2000 appear to have found support at their 50-day moving averages. This may be an opportunity for swing traders to probe the long side. That noted, our distribution count remains stubbornly high with 8 days in the past month on the NASDAQ and 7 for the S&P 500. According to investors.com, the current market outlook remains an uptrend under pressure. Meanwhile, our market timing model is clinging to a buy signal for the S&P 500 while the NASDAQ is on a sell signal. The buy signal on the S&P indicates that conservative traders can buy, but we shouldn't be increasing margin at this point. The sell signal on the NASDAQ indicates that aggressive traders should be off margin and can sell short. I wouldn't want to at this point, but you can sell short. We should sell any long position that if sold at current stop levels would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. In spite of the mostly higher market yesterday, declining issues edged advancers by about 8 to 7. New highs bettered new lows. According to our Ramosi ratio, large capitalization stocks edged small again yesterday, but small caps continued to outperform on a 10-day moving average basis. The bulls prefer to see small caps outperform. The market appears to be struggling to define short-term direction. The good news for the bulls is that yesterday's stocks made higher highs and higher lows than Friday's session, and closed generally higher for the second session in a row. As long as the S&P and the Russell continue to respect their 50-day moving averages, bulls may want to begin to look for long-side opportunities. That noted, this is still not a safe market for the bulls. Our distribution count is uncomfortably high, and our market timing model on the NASDAQ and, unofficially, the Russell 2000 remain on sell signals. So be careful and maintain stops at their tightest levels. Okay, yesterday the NASDAQ composite was up 14.05 points, or 0.3%. We closed at 4750, and unlike the Russell 2000, the NASDAQ is trading below its 50-day moving average. That 50-day moving average may provide resistance for the NASDAQ as it tries to push back higher. Trading volume yesterday was below average and below the prior day. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since February 18th. The NASDAQ is stubbornly clinging to 8 distribution days here. 8 distribution days is the reason that the uptrend is under pressure right now. The NASDAQ appears to be bracketed by support down here in the 4506 area. And we're going to call resistance the 50-day moving average for right now. If we were to break through the 50-day moving average, the next area of resistance is going to be the 4900 range. Our market timing model is on a sell signal for the NASDAQ. A sell signal indicates that aggressive traders should be off margin and can sell short. Again, I wouldn't be selling short at this point. We should sell any long position that if sold at current stop levels would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs. Let's take a look at the S&P 500. S&P yesterday was up 1.55 points, or 0.08%. We closed at 2058. Notice how the S&P came down. It tested support down here in the 2044 area and held. It also tested support at its 50-day moving average, which we show here in red, and it held that as well. Yesterday we had a higher high and a higher low than the prior day. That's short-term bullish. Trading volume was about equal to the prior day and also about equal to average daily. The S&P right now is in an uptrend under pressure and is bracketed by support at its 50-day moving average. If it was to undercut that level, the support would be down here in the 2044 range, which we held the other day as we've noted earlier. Resistance is going to be up here in the 2116 area. Our market timing model for the S&P 500 is indicating a buy signal. Before we go, I want to talk about LGI Homes. LGI builds entry-level single-family homes in high-growth markets in Texas, Arizona, and 8 other states. The stock has been working on this almost 6-month-long cup with handle base with a pivot point up here in the 2977 area. Yesterday LGI tried to break out of that area. It closed below its pivot point. Trading volume was very heavy. The reason that I bring this up is LGI reports earnings today before the opening. They haven't reported as of this video, and so I don't know what those earnings are going to be. But LGI is my favorite home building stock. We've seen a lot of pretty solid accumulation in LGI over the recent weeks, and we're putting in a pretty solid cup with handle base here. If the earnings come out as expected or better than expected, I would anticipate a fairly good day out of LGI. LGI gets a 68% checklist rating. It is working on a first stage base and can be bought by aggressive investors here, keeping in mind that the NASDAQ composite right now is still on a sell signal, and so if you buy LGI or anything else in this market, you want to keep your stops at their tightest levels. Keep an eye on the LGI earnings today. Keep an eye on how the stock reacts to them. Today's probably going to be a pivotal day for LGI. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.